For some reason, on the road with the stock market seems like swimming upstream. And whether traders are actually buying stocks, or as in the case now appears to be for 12 consecutive weeks, that traders are not buyers in the market, it's mostly irrelevant. And even with 3 straight months of outflows from mutual funds and ETFs, the most important thing is that someone is pushing the market higher. Is it the buybacks or a massive short squeeze? Well, the latest evidence indicates that it might be a short squeeze. But that too is irrelevant because the S&P 500 is rapidly approaching the massive resistance level at about 2800, where 3 of the last 4 breakout attempts have failed. So let's take a look. So we're looking at the 2-year weekly chart on the spiders, the SPY, and this is being recorded prior to the close on Friday, and we're currently at 278.67. So the actual close may be a little bit different, but this is just fine for now. And you can see here the 3 attempts that we've made to break over the 2800 level there. 1, 2, and 3, and we're approaching that level once again. So let me just draw this line here. That's representation purposes. It's not perfect, but you get the idea. So off of the bounce here, we've rumbled and stumbled all the way up to this level here, and we're about to approach that resistance level. In my humble opinion, I don't think it's all that important, simply because I think we're going to move through that. To me, the next important level is right up here, the prior high from back there. That's the level that you need to keep your focus on, not down here where everybody else is focusing on, and let me show you why. Moving down here into the MAC, we can see the bottom at that level there in late 2018. We're heading on up. Clearly, the fast line moved through the slow line, and there is no stopping at this point. We're going to head right through that zero line midline and continue on up. Not sure how far, but I don't see any resistance at this point, so I don't think the 2800 level is going to be any more than a blip on the radar. Moving here into the histogram, same thing shows. Now, the price rate of change, we did have a bit of a top there and a little bit of a retrenchment coming, but the fast line is well above the slow line, so I think we're going to get a reflection back on up, and I think we're going to climb. The relative strength shows that we're continuing to climb, and then the stochastics, as strong as the MAC. Fast line and slow line move through that midline here, the 50 line, and they're heading on up. No sign of any slowdown. It's going to be similar to this here. Moving on up, I think we're going to move into that overbought territory between 80 and 100 soon. We may be there with the fast line right now, but the slow line is going to follow soon enough. So I think we're going to be up in this area for a couple, 3 months. So we're going to continue to climb. The only problem I see, or one of the problems I see, is we do have a declining volume. Here into the Williams looks like it's moving on up, and it's pretty strong. It's in that overbought territory between the -20 and 0, but it looks just fine. Moving on up here to the price chart once again, I think that this is just going to be a hesitation at the 2800 level because of all the technicians out there. But I think we're going to move through that and continuing on. Here again, this level, the prior level, is the most important. Now, we did, from that level there, move up through that prior high here into this new level here, but it only lasted a while. So that's what I want to watch out for once we get up to that level. Is it going to hold or is it going to break down? We'll know more later. But for now, I think we're going to continue on up. Let me just show you one other chart to give you further evidence of why I think we're going to continue heading up. So now we're looking at the CBOE Volatility Index, the VIX, and this shows why I think the market's going to continue to move upward in the next few months or so. The top here on the VIX coincides with the bottom, more or less, of the market. So this VIX moves in an inverse relationship with the market, as we've talked about before. So when the VIX moves down, the market moves up. And I see the VIX continuing to move down. Here in the MAC, we can see basically that the fast line is heading on down quite quickly. There's no sign of stopping, no sign of hesitation at all, and the slow line is going to move on down as well. So again, I see a basing like this, which is going to take several months, 1, 2, 3, 4 months or so, and we're only down to this point here. So I think we have 3 to 4 months, perhaps, of a market uptrend. So this is the other piece of information that's giving me the confidence to say that the market's going to head up for a few months. Now, I'm going to stay out because I want to see what happens when we meet that prior top in the market. I think that's when we could have some big trouble again. So I'm being patient. But in the meantime, there's always those stocks in every market conditions that show opportunity. Look for those stocks. Don't look to chase the market right now. Be patient. And for today, that's ChewDog Charts. Thank you.